everybody and welcome back to Flutur's trading experience. This is the second video in the series and I'm going to make my first ever trade with real money. So wish me luck. So I'm looking at the euro dollar position. Yesterday we had the PMI or the Purchasing Managers Index grow up in Europe. We have a look at the indexes right here. So basically, whenever it's over 50, it's up. Whenever it's under 50, it's down. When it's 50, it's equal. But mostly we see it's going up, and Ilyas Spivak from dailyfx.com claims that the manufacturing and service sector grew at the fastest pace in 3 years. So basically this caused up a bump in the euro-dollar pair. This is a daily chart and this is a candle for yesterday. As we can see, it opened at 138.72, closed at 139.26, and it hit a 7-week high at 139.50. Yeah. So what's happening today? It looks like the buyers are beginning to close their positions and it's going lower, like in a very small pace, but it looks like it's going into a bearish trend for now. What I want to do, I want to identify some of the resistance and support lines. We could find out where we could have a reversal in the trend. Let's take a look real quick at the fundamentals, then we'll go deeper into technical analysis. We have all the headlines regarding the pair we are watching. So as we're watching euro-dollar, we have all the headlines regarding the euro-dollar here. So yeah, this is quite useful. I'm gonna close this for now. I've already opened up some of the news. So it looks like euro is going to hit the 140. We'll see about that. And here we have a quote, but if euro starts to strengthen again, it could go significantly higher, even towards 145 or 150. So we definitely need to find the reversal trend and get into a long position here. Also, what we have John Kicklighter from dailyfx.com acknowledging that dollar ends congestion with a collapse, and he also claims that it's important to appreciate that this is a dollar-based move. Yeah, and in terms of volatility, it looks like we're going for a bumpy ride. We'll see about that. We'll keep that in mind, even though this is a quite vague article. And here we have Ilyas Spivak again from DailyFX. They are pending short on, I think they're having a long-term short position on the euro-dollar, and they say that they continue to favor euro weakness, but trading that view in defiance of near-term upward momentum seems ill-advised. Yeah. And we have Jamie Satel from DailyFX claiming that the euro-dollar recent high is now a support level. Okay, let's get into our technical analysis. Let's try to see if we confirm some of the fundamental triggers and try to get into a trade as soon as possible. Okay, so we are looking at the euro-dollar pair right now. Let me just change real quick the chart from daily to 4 hours. And we'll try to identify some support and resistance lines on this chart right here. Sorry about that. So how do we do that? Basically we need to identify on the chart where we have price going up, hitting above, going down, and going up to the same level again. How do we do that? Let me just draw a few little arrows right here. So To start with this position, we have a bullish trend here, then the price goes down, then goes up again, and goes down again to this level. So basically we have two bumps right here. We also have some action going on right here at this area. Up, down to this one. Let's take a look at this bearish position here. Price goes down, then basically goes up to this level right here. Then we have another bearish here. Yeah, that's about it. So basically we have 1, 2, 3 bumps in this area. So we could confidently draw a horizontal line right here. So this looks like a strong support area right here. Up here we have 1, 2 bumps here, and 1, 2, third bump. Basically this resistant area right here becomes the support area right here. So I'm gonna go ahead and draw a line right here. We also have another one right here, but it's too close to each other. Basically we have a support resistance area right here. Let me just delete these arrows real quick. Okay, so the picture is a bit clear right now. We have a support resistance area here, and we have a support area right here. Yeah, but the thing is, we're really actually interested what's happening in this area, because this is where the price is now. Unfortunately, we don't have any data to track back from it in this area, so we'll have to go further away. It's of course a bit riskier, but we have no choice for now. So we have some activity in this area around here, and yeah, we're gonna base our lines from these bumps right here. So we have something going on around here. So let's get a line right here, and another one at this high level of this week. I'm going to color it in another color, just to see like what's the highest price available. Yeah, let's go back to the present and see what we have going on right now. Yeah, so basically this resistance level we had in the back was broken through today, and the price started to go a bit down. So we see another small reversal here, but we don't see a really steady trend. What I would like to see, I want to see like 4 or 5 candles in a row going into a bearish position, and maybe hitting a support line. Then we could go into a trend, go buy long. Well, we'll see about that. For now we have like very small information, and it's very risky to go into a trend. Let's maybe try to draw a Fibonacci retracements. I'm gonna change my chart to daily for doing that. The Fibonacci is not a very good way to base your trade decisions on, but just as a backup, let's see what it shows us. To do that, we need to find the two trends. So we have this trend line right here, a strong bullish trend here, and going bearish here. Let's try to go from this position here, and to this one here, and to this down here. We have the 50 Fibonacci, which is a strong one, and I'm gonna draw a line, a horizontal line here. Another one coinciding with Fibonacci up there. So let's go back to the present. And I guess some other traders were using the same setups, and they starting buying. Look how it's going up right now. Right now it's a bit difficult to make a decision, a bit riskier. We'll see what happens in a few hours. Okay, so I kept looking for a few hours at the euro-dollar pair, and it looks like it's bouncing up and down from this support and resistance lines right here. So it seems pretty flat, there's no opportunity for buying or selling. But I'm just so impatient to go into my first trade, so I kept looking into the news for new opportunities. So I found this interesting thing, looking into the New Zealand dollar and US dollar pair. Reserve Bank New Zealand Governor saying that the exchange rate is overvalued and does not believe its current level is sustainable. And in this next piece of news, it says that the Kiwi fell to 0.8712 after the governor speaking in ham again. The Kiwi, by the way, is just a nickname for the New Zealand dollar, if you don't know. Yeah, so I took a look at the technicals, and as we can see, it's falling down right here. I drew my Fibonacci retracements based on this trend right here, going down, going up. It looks like the trend is going towards the 0.5 Fibonacci coefficient. I don't know, is it going to go through it? Is it going to bounce off it? I'm so impatient about getting into this trade, so I think I'm gonna go short right now. Take profit at 86.29 and my stop loss like around 20 pips up over Fibonacci coefficient. Yeah, so I'm gonna do it, wish me luck, let's see what happens next. Okay, so as you can see I already have a Google stock trade going on. It's just they offered a $20 bonus when I signed up, so I decided just to go ahead and buy some Google stocks. So for this trade, it looks like I don't have much flexibility on choosing the risk level because I'm trading with a small account. So I'm gonna stick to a 25-to-1 leverage, invest $40 into this trade, and I'm just gonna go ahead and set up my stop losses and take profits. Yeah, it's 5 to 10, 25-to-1 risk ratio, don't carry over a weekend. Okay, we're done. Okay, wish me luck, I'm gonna go and fill in my trade calendar for now. And that's it. Okay, let's fill in our trading journal. So we have trading date, it's May the 7th today, 2014, and we entered at 4 o'clock and 12 minutes. The exit date, we don't know it yet, it's a short position, the pair, the Kiwi and the US dollar. We have one lot into the trade. The risk was 5% and the gain is 10%. The stop loss, we've set it at 0.8689, and the take profit was at 0.8629, and we've entered at 0.8669. The exit, we don't know it yet. Entry reason was mainly the Reserve Bank of New Zealand Governor speech, and we've double checked it on with support and resistance lines, with the MACD and with the Fibonacci. Entry thoughts, not very confident, but looks like a good trade to start with. Okay, so I closed the Aussie dollar position this morning as soon as I woke up, because during the night, as we could see, the trend was going down as we predicted. It was even getting close to our take profit. Unfortunately, it started to reverse into a bullish trend. I don't know why, maybe it found some support in this area, I cannot explain it for now. Well, anyways, I saw that it's starting to form a bullish trend here with these 4 candles, even though this one struggled to get lower right here. But as soon as it passed through again through our Fibonacci level right here, I don't want it to risk anymore, so I got out of a trade while I was still having profit. Okay, so we are at 1.5% profit right here, so I'm closing the trade. Bam. Okay, 60 cents, that's good. Alright. It's not a big profit, not as we expected, it's just 1.5%, but for the first trade, it's fine for now. Alright, so I filled in my trading journal right here. As you could see, we got out on the May 8th at 5:47 AM. This is by the way UTC time zone. I'm at UTC +2 right now. Yeah, so I filled in the exit thoughts because the trade reversed and I got out while still having a small profit. And the duration of the trade was 13.5 hours. The risk to gain ratio was pretty high, 50%, and we got just 5 pips. With a 25 leverage, we got a 1.25% gain. I know it's not like a spectacular gain, but for the first trade, I just wanted to get out of it while still having just a small amount of profit right here. Alright, so this is it for now. I'll see you in the next video where we'll take a look into the moving average conversion divergence and we'll go into another trade. Thank you and bye bye.